Welcome to Game of Trades. This is your host, Peter, and I'm here to help you navigate through this market step by step. We're truly living through some incredible times. This is not an investor's market. This is a trader's market. So if you want to be part of this, make sure to subscribe to the channel. Now, without further ado, let's get right into it. So we're going to first do a quick recap of our current positioning on the markets by showing you the trades we have on the site on gameoftrades.net. So this was the first trade we had on this recent run up on the S&P 500. We caught the markets at the bottom as it was consolidating at support, and we did hit those three targets. This trade is now closed out, and we re-entered into the trade a little bit later on. I'm going to show you. So this is the second trade we made. We re-entered at 3,534 points, and again we had those three targets with the stop loss at 3,469. We ran into the first target and we raised the stop loss. So we made one last post saying raising the stop loss to break even on the S&P 500. So we are still long on the S&P 500 with a stop loss at break even because we don't want to take any additional risk on the market. We made a video the other day covering the short-term risks on the markets, talking about the put-call ratio and the VIX. That's something we're going to talk about again today, later during this video. But there are some major risks in the markets. So having a long trade with a break-even stop loss is definitely something that we're comfortable with right now. So back on the S&P 500, if we zoom in here, we'll put our stop loss on this chart as well. It's around at 3,535, we'll call it. And so far it's held above that level. We raised our stop when it was here, and so far it's held above this support level. So this is an important level, and we're going to talk about this level in just a couple of minutes. Now we're showing you these successful trades, and we're not doing that to say that we're always spot on in the markets. We might get stopped out here. This trade may very well go against us. That's why we always have a stop loss. We've been wrong before, and the only guarantee we can give you is that it may happen again. So don't follow any of our trades without making your own research beforehand. As many of you know, we were on the wrong side of the market throughout this period. We had three consecutive trades here shorting the market that obviously got stopped out, and that was a really big lesson to take away for us and for your trading as well. We've been talking to a lot of our members on the trading room, and every time somebody says that they made profits or gains in the stock market, we reply to them, it's often after the biggest gains in your trading that you'll make the biggest losses. And that's exactly what happened to us here. We're not immune to that kind of trading psychology. We shorted the markets throughout this entire period. We shorted the break of that trend line all the way down here, and then we re-entered on this leg down right here. We traded almost that entire move. Those were some big gains. That was a 10% drop, so almost 10% profit on that move down. And on this move down, we made almost 20% in profits. So these are some big numbers in a very short time frame, and that's why we say this is a trader's market. This has been one of the most volatile years in history. So this is just a perfect environment for swing traders. Now we also traded the bounce here. We called for a bull trap at the bottom of this zone here. We called for a bounce, traded the first part of that bounce. Then we started shorting aggressively. We talked about the fact that this was a new bear market and that this was a bear market rally. We looked at every single bear market rally in history. We compared this move to all the data that we had, and we expected a reversal off this level. This was the 61.8 retracement level. So we shorted at resistance on three separate occasions. And of course, as soon as it broke out, we knew that this was no longer a bull trap, and we immediately changed our thesis on that breakout. So two lessons to learn. Never be complacent. If you make gains from our trade here and you're still long on the markets, you have to keep an open mind that this trade can go against you. You have to keep your stop losses and always challenge yourself. And the second lesson to learn is that you have to adapt. And it doesn't matter if you had losses trying to short If you're on the wrong side of the trade, you have to readapt, and that's what we did. We went long in this area twice, and that played out extremely well. Now we also try to apply those rules to our long-term view. We still expect a rapid move up much higher in the markets, but we're not stuck on that scenario by any means. That's our preferred scenario, but could the stock market turn around now and crash? Absolutely. Anything can happen in the markets, and that's very important to understand. If you're serious about making money in the market, you need to know that you don't know everything, and that's very important. If a major bank fails tomorrow, will the stock market go crashing? Absolutely. If Biden comes out tomorrow and says that he wants to double the stimulus package, could we see a massive rally? Absolutely. Anything can happen. All we can do is put the probabilities on our side, and that's why we look deeply into the technical picture and see if that matches with our long-term view, which is right now more upside. So what do the technicals say right now in regards to this scenario? And as a matter of fact, it really depends on what happens today with this candle, and I'm going to show you what I'm talking about. We're going to go on the SPX because this is the futures chart and it doesn't go back as far as we want to. So we're going to go on SPX, and you can see I have a line drawn here. It's the only line on the chart, and we're going to zoom out, and you're going to see this is the line that we've been talking about for a while on this channel. It goes back to 2009, and we have a lot of reactions along the way. And so you can see throughout these years here, throughout the end of the bull market, or at least what we believe is the end of the bull market, it acted as a strong line of resistance here. That was a major reaction, major reaction, major reaction again. And so if we jump to a daily chart, we'll see what's happening right now. We just gapped above it. Now, it's not the first time that's happened. We gapped above it here. We broke above it here and here. So this needs to hold, right? We need to see that hold. But if it does hold above this line and it actually continues higher, then that favors a lot more upside. And that's actually both bullish and bearish at the same time. Now, before anyone comments that sometimes we're bullish, sometimes we're bearish, please try and listen to this and understand what we're going to try and say here, because this is a huge part of our thesis. And by the way, do not hesitate to drop a comment or question down below. We've been very busy replying to the members on our site on gameoftrades.net, but we're going to try and reply to more comments on the YouTube videos as well. So why is this move, why is this potential move potentially bullish and bearish at the same time? Well, to explain that, we're going to go on the weekly chart and we're going to see what happened the last time that happened. The last time on the last bull market in 2008, we had a very similar scenario. And you'll notice this type of development actually happens a lot towards the end of bull markets. You can go back in history, and this is something that happens a lot. Now, again, we've looked back in history before, and it hasn't always worked out. This is all about probabilities. So we had in 2006, this move up here, break above this resistance. Before then, the market was just grinding slowly. That's bullish price action, that's healthy. But then the market decides to break above that resistance and go into a larger move up. And that marked the beginning of the end for this bull market. Just a few months later, the stock market broke back down again. So it's bullish and bearish at the same time. And we have more examples of that. We can take a look at the .com bubble, although that's better to look at on the actual NASDAQ 100. So again, very similar. This is the .com bubble. In the tech sector, you can see the healthy bull market here. This is healthy price action for years. And then the market decides to actually break out with a major move right here. And that marked the beginning of the end of the bull market, right? We had a final move up and then the markets broke down. Does that mean the exact same thing's going to happen? No, but we're definitely using that as a template for what's happening right now. In fact, we can look at 2020 and you'll look at the similarity right here. Same thing, steady bull market for years. Then tech breaks out here, backtest, and right now we'll see what happens. But if we follow the same template, it's one final move up and then a breakdown, which begins the major bear market. So now we're done with the long-term time frame. Let's take a look at the daily chart on the S&P 500. We have a few things to cover today, but I first want to take a quick look at the VIX. I think this video is going to last a little bit longer than anticipated. This is the VIX, right? We're still at support. This is a confluence of support. Now, does that mean that we're exiting our long trade? Absolutely not. But it means this is likely a bad idea to get into a long trade on the S&P 500. We could have a breakdown here, and if we do have a breakdown, then that will be bullish, right? Same thing happened here. Big breakdown of this channel support, and this actually marked the beginning of a big rally on the S&P 500 with low volatility throughout July and August. So that's what you want to see if you're bullish. And if you're looking for downside on the S&P 500, of course, you want to see the VIX hold up above this level. Now, let's quickly look at the put call ratio and look at this. This is a big warning sign on the S&P 500. It is very extreme. I don't think it's ever been this extreme. It's been extreme like this once before. So definitely no new entries here, right? We're keeping our long trade with a stop loss break even. We're not taking any additional risk, but no new entries. The market is risky. So now let's take a quick look at the S&P 500. Having seen that put call ratio reading makes me a little bit more skeptical about this bounce here. So we're going to have to see how this develops, but we have to be ready to be stopped out on this trade. You know, as long as we're above this level, great. We're staying in the trade, but there is the potential for a pullback right now. Now, what I wanted to talk about in terms of levels is this level right here. We had a very similar situation on the S&P 500 right here in July. Very, very similar situation. You can see we made a top right here. The market corrected, then broke out of this resistance level, and then it actually back tested it for a few days, consolidated around it before resuming the rally. And you can see how the MACD behaved throughout that period. You can see the blue line right here was curling down as if the momentum was going to turn back down, but it didn't actually cross over and it reversed. And so a very similar situation here. Momentum is about to cross down, but if it holds above this level and actually rallies, then you're going to see a momentum thrust. So the technical posture of this zone is very similar to this zone, but of course, again, this is all about probability. If the markets turn around, then that wouldn't look so much like that, and it actually would look a lot more bearish. We'd be looking for a move back down to this area of support. So that's why we have the stop loss right here. We don't want to see the price go back down below here. Now make sure to go and check out gameoftrades.net. We're posting a lot of articles. We recently made a trade idea on Tesla, which is playing out very well. We entered on the break of this resistance level at 462. Tesla was in a giant consolidation pattern. We broke that level, and it has so far been a 15% gain on this trade. Now for Trading Room and Pro members of the site, we'll be making a premium video covering gold and GDX and what potential scenarios we see going forward. Now this video was sponsored by PrimeXBT. Now listen up, because I know this is going to be something interesting to a lot of subscribers. They have a co-vesting feature on their platform. So you can go on their platform and find outperforming traders and copy their trading activity. So it's really simple. It's easy to use. It makes you see different trading strategies, different portfolio diversifications. So it can be profitable, it can be educational. And by the way, if you are a trader and you've become profitable through watching our videos and the content on the website, you can go on their platform and grow a following and receive success fees from your own trading. So make sure to go check that out. It's a very interesting feature. The link is in the description below. Now, I hope you guys enjoyed this video. If you did, make sure to drop a like on this video. In the meantime, good luck on your trading.